My name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for the first week of October 2023. Well, rates are higher than they've been in roughly 30 years. Part of that is Congress wasn't passing a budget, then they extended it a little bit. Congress fired the House Speaker. That created turmoil. When there's more turmoil or inconsistency or lack of stability, interest rates are going to go up. And every little piece of bad information, there's going to be what's called an overreaction. Well, that's kind of what we saw late last week. It was an overreaction to a jobs report. And then today, well, this week, Monday was all right, but Wednesday and Thursday were actually pretty good. So Monday, Tuesday up a bit, Wednesday, Thursday down. This morning, non-farm payrolls came out and it was substantially higher than what was expected. Well, more people working, higher inflation's expected. So the T-bill took off this morning, but then came back down to settle out where it was last Tuesday. We don't know if rates are going to actually keep going up or down. I can tell you with pretty good certainty that if the federal government doesn't create some sort of stability with their messaging, and if they don't communicate things in an effective manner, in a way that makes sense to investors, you're going to see this turmoil and you're going to see rates move up, and you're going to see overreactions where a little piece of data that might not be as good as they expect it to be is going to have a big reaction of interest rates. And that's kind of what we're seeing. Anyways, for us, so far today on Friday, with rates kind of stabilizing where they were earlier in the week, Monday, Tuesday-ish, government, VA and FHA are still high sixes, though borderline pretty high sixes, but a little bit of money brought you right back down to the mid sixes, and you're going to see that in the email. Conventional was right at about mid sevens, and a little bit of money brought you down to the lower sevens, and that's just roughly where we were this week. One of the topics I want to talk about is comparing loans with APR. Now, I don't know the exact numbers right now, but what I'm going to do is pop up a VA scenario, disabled VA. And in this scenario, that means there's no VA funding fees, so it's very clean. What I'm going to do is pop out on my left shoulder here is an interest rate at par, or whatever par is, okay? But you're going to see that the APR, I think interest rate was like 6.99. I just ran a quick scenario. But the APR is really close to that. It's very small. And then over my other shoulder here, my right, your left, I'm going to pop up max discount. And under max discount, you're going to see that the spread between the base rate and the APR is really large. And I'm doing this to create an extreme example on how to compare APR. People tend to try to compare APR by looking at just the APR number and saying, well, this one is this and this one is that. This one's lower, therefore that's a better deal. And that is absolutely not the case. What you want to do is take that base interest rate number, subtract that from the APR interest rate, and it gives you the spread or the margin. And if we look at our example on this VA deal, you're going to see that at par, that margin spread is really, really, really small, or the spread between the interest rate and the APR is very, very small. But we go over here to this big discount model or discounted interest rate, and you're going to see that that spread is really big. We take the APR, we subtract the interest rate, and that spread is substantially bigger. So one of the best indicators to compare a mortgage, one mortgage to the other, from different brokers or lenders, direct lenders, it doesn't really matter. You don't take the base APR and compare them to each other. That's wrong. You're actually going to get the wrong answer almost all the time. What you need to do is take that APR, subtract out that base interest rate, and what happens is you get that spread. You compare the spread. That's how you know if you're getting a good deal or not, or which deal is the better deal. But anyways, Mike Florin, I'll talk to you guys later, and yeah, have a great day.